So what are the long-term impacts of this new strategy President Trump is taking on? Number one, slower economic growth, which could equate to housing market stagnation. If Canada's economy slows down due to trade disruptions, job growth could, decline, especially in industries that rely on exports. Fewer stable jobs means fewer buyers entering the housing market. Real estate investment could cool down, leading to slower price appreciation or even corrections in certain areas. Now, the impact on the GTA, on the negative side, fewer first-time buyers due to job insecurity and affordability concerns. A more balanced market on the positive, reducing bidding wars and unsustainable price spikes. Number two, higher inflation, which means rising costs for renters and homeowners. If tariffs drive up inflation, everyday costs like food, utilities, gas will rise. Higher living costs mean people have less disposable income for mortgages and or rent. And landlords may raise rents to offset their own increased costs. Now, again, the impact on the GTA market, increased rental demand perhaps, which, could be good for landlords because, few people can afford to buy homes in that case. On a negative, more financial stress on homeowners, especially those with high mortgage debt. Number three, supply chain shifts could bring more manufacturing to Canada, which equals housing demand shift. If U.S. tariffs force companies to move production out of China, some of that could actually relocate to Canada. More factories means more job creation in manufacturing hubs like Ontario. This could lead to increased housing demand in industrial cities like Hamilton, Kitchener-Waterloo, and even the GTA outskirts. The impact on the GTA, growing demand in suburban and industrial regions as workers relocate for new jobs, potential condo and housing boom in areas with strong employment growth. So what's the bottom line for the GTA real estate market? Number one, short-term boost in sales if mortgage rates drop, but you'll see some uncertainty that could keep buyers cautious. Number two, few and foreign buyers could cool the high-end market off. Number three, higher construction costs may reduce new home supply, keeping resale prices steady. Number four, long-term risks of economic slowdown could impact affordability and home prices. So my final thought, as we've seen over the last few years, the GTA real estate market remains pretty resilient. But, if trade tensions drag on, the economy and the job market will determine really whether the housing market stays strong or cools off in the long run.